Hello, my name is Caroline Birchinall and I'm Head of 3D Secure in Europe at Visa. Today we're going to be talking to you about SCA compliance and optimization. PSD2 has created a lot of challenges in the industry. There's been a lot of debate. It has certainly introduced challenges but also opportunities, but leaves us with a lot of unanswered questions. So what we're going to do today is try and help guide you through some of the key issues raised by the regulation. So we'll be covering the changing regulatory landscape and how the way that we process electronic transactions in some cases will need to change. We will be looking at how Visa has what Visa's guiding principles are and how we as an organisation have approached strong customer authentication, and also looking in particular at SCA for remote electronic payments. We'll also be looking quickly at SCA for contactless payments and covering Visa's new SCA products and programs, which really will help you, all of you within the ecosystem, optimize the payment experience for your consumers. And lastly, we'll be sharing with you Visa's SCA compliance approaches and tools. And what you will do is find afterwards a lot more information on all of these things in our new PSD2 paper, which is now available for you to look at. And certainly over the coming months, you will be seeing a lot more being published. So please stay tuned for more information as we move forward. So PSD2 has certainly highlighted to all of us the changing landscape that we are now operating in. Digital payments are now so much a large part of our business that it's no surprise that the regulators have looked at digital payments and want to make sure that all payments are both secure and convenient for consumers. We're entering into uncharted territory because the regulation challenges us to look at things in a different way to make sure that we do keep our payments secure, which of course as an ecosystem is vitally important for all of us, but equally making sure that any changes that we make to technology, any increases in the friction within the system that are needed, are not at the disadvantage to our consumers at the same time. We are entering into a different environment where we have an open ecosystem, and certainly the regulation is designed precisely to make sure that competition thrives, that all of the players in the ecosystem are able to innovate and create new technology and new solutions that make our consumers' lives easier. We have a need to look at new requirements for payments, and that has challenged all of us to raise our game and really do a good job, as we always do, of meeting the challenges in the payment ecosystem. But equally, the difficult thing, I think, in particular with PSD2, is that it brings in a lot of ambiguity. And as we implement these new solutions and new technologies, we need to really be clear about our understanding of the regulation and what we believe is right for the ecosystem and what we believe is within the spirit of what the regulation is designed to do. So the European Payment Services Directive 2, which is its long name, really has two key principles behind it. First of all is Strong Customer Authentication, which is designed to make sure that payments online or any electronic payments, whether online or face-to-face, are secure for the customer, and requires that payment service providers secure the transaction with two factors. So that would be something you know, something you have, or something that you are. Now, the requirement for strong customer authentication, there are exemptions to that. So, for example, contactless payments at the point of sale are exempt, subject to some qualifying criteria. Also unattended transport and parking terminals, because clearly it's very difficult to actually do strong customer authentication in certain transit scenarios. There is an exemption for recurring transactions where you have subscriptions. The regulator clearly realised that there are many situations where you set up an agreement with a merchant which continues long beyond the time that you as a consumer are sitting in front of your device. So they need to definitely ensure that that capability is built into the regulation. and also for low value transactions below €30 in the e-commerce world or below €50 face to face, and secure electronic corporate payments as well. From the cards world, the two particularly interesting exemptions are transaction risk analysis and trusted beneficiaries, and we're going to talk a little bit about those later on and how we can help clients really optimize their use of those exemptions. Aside from the exemptions, there are certain transactions which are out of scope of the regulation, so we'll be talking about those as well in a little bit more depth later on, just to make it clear where we believe transactions are in scope or out of scope and what that means. The second part of the regulation, which to many of you in many of our clients will be very, very interesting, is the area around access to accounts, open banking as it's called. And there's a lot of activity within Visa to look at ways that we can help the ecosystem deliver really good solutions for that and make that work well. But today we're really going to be focusing on strong customer authentication in particular. So Visa has some key guiding principles for how we have delivered on PSD2. First of all, behind our organisation, really built into our DNA, is the requirement and our inbuilt need to innovate. We want to make sure that our consumers have choice and control to make informed decisions, and that means giving you as clients all the best technology and all the best services that we possibly can so that you and our consumers are well served. We are building trust and security into every single payment experience that we build, and certainly from a PSD2 perspective, from Visa's perspective, we are completely behind the whole premise and reason behind this regulation, because security underpins everything that we do. We want to make sure that we expand access to data whilst keeping it protected. Clearly, data is an asset and it can be used for very good reasons to secure our transactions and make sure that where data needs to be shared, it is done in a secure way, and where we hold data and where you, our clients, hold data, that is protected, is kept secure and used to the best effect to keep our consumers' payments as secure but equally as seamless and frictionless as possible. We also totally recognise the need to foster competition and innovation through open standards, so we're very keen to make sure that the ecosystem itself provides for that, and we provide access to our data through APIs, through our Visa developer platform, so that all of you have access to the great capabilities that we offer. So in terms of SCA compliance and optimization in particular, there are certain things that we have really kept in mind while we've driven forward and tried to solve for some of the challenges that PSD2 has presented us with. First of all, we recognise that despite the fact that Visa is not a regulated organisation under PSD2, we know that you all are, and we really want to make sure that we provide leadership and clarity to the ecosystem in terms of what we believe the regulation is saying and how payments are intended to operate, so that we retain a good and unified understanding across our entire network. We want to develop products which can build and evolve our entire ecosystem, ensure that everything works as well as it ever does, PSD2 or not, so that everything works seamlessly and new technology is available to everybody. We are developing new programs and looking at our rules to make sure that they are appropriate for the regulation and also drive good behaviour amongst our clients. And that includes setting really important and clear new standards for issuers, acquirers and merchants. So for example, the transfer of data to make sure that issuers are responding with risk-based authentication where they can, and that where challenges are needed, that those challenges are seamless and secure and easy for our customers to understand. So we're basically making sure that abandonment rates are kept to the minimum and the whole system works well as it possibly can. Lastly, of course, goes without saying that compliance with the regulation is of course the number one thing that we all need to bear in mind, and we're making sure that everything we deliver provides you with the ability to ensure that all of your payments are 100% PSD2 compliant. So first of all, the first question I think we need to address under PSD2 is the question of when is strong customer authentication actually required and when is it not? So as far as remote electronic payments are concerned, firstly, strong customer authentication must be applied to all electronic payments unless out of scope or exempted. That's very clear. And financial transactions can be classified in two ways. First of all, cardholder initiated transactions, which is the transactions that most of us will be most acquainted with. And in those situations, those kind of transactions are completely in scope of the regulation. However, there's a very large part of our business where merchant initiated transactions are out of scope and therefore strong customer authentication is not needed. And in many cases, card payments do actually fall into that category where the payment itself is pulled by the merchant, is initiated by the merchant, and the cardholder has simply set up some kind of agreement with the merchant to enable that to happen. And we're going to be talking about merchant-initiated transactions and cardholder-initiated transactions later to describe in a little bit more detail what we mean by that. Now, in terms of strong customer authentication and how that can be delivered, Visa's 3D Secure protocol provides the mechanism for that. It has worked for many, many years with the existing version, 3D Secure version 1, which we believe is completely compliant with the regulation for tomorrow. But we have the new version coming out soon, more on that later, which will provide much more functionality and absolutely help all of our clients comply with the regulation and enable them to perform strong customer authentication. Secondly, in the face-to-face world, strong customer authentication must also be applied to a payment, and it's usually through one of the following methods. So it could be either by chip and pin, which is considered to be two-factor authenticated, and secondly, it could be via contactless, which has some exemption criteria, which again we'll go into a little bit more detail on that later. So first of all, I want to talk a little bit about strong customer authentication for remote electronic financial transactions. So as we just said, cardholder initiated transactions are within scope of the regulation, and therefore unless exemptions are available, then SCA is required. So the first example we have here is a one-time purchase, and this might include card on file transactions as well. And the reason I say that is that just because a transaction, a card is held on file by a merchant doesn't necessarily mean that it's a subscription or a merchant initiated transactions. Many of us have our cards on file with many merchants, which save us the effort of having to type in our card details every single time. But nonetheless, the transaction itself is initiated by a cardholder. So in those very simple, straightforward cases, SCA is required. However, there are many exemptions, and if one of the exemptions applies, then of course there's not necessarily a need to actually do the full SCA. So more on that later. The second example here is an adjustment to an existing order, though this might be a change of available items or a change of shipping costs. So it might be, for example, a change in the delivery charge. If you think, or it could be, for example, if you're doing online grocery shopping, you might have ordered your groceries, but the weight of some of the items might change, which means that the end amount could be ever so slightly different to the amount that you actually checked out with and authenticated for. Now, Visa's recommendation on this is that obviously, depending on the circumstances, SCA may not be required for these situations, provided the retailer, the merchant has made it very clear through their terms and conditions that situations where the final amount might vary slightly, so provided it's within those terms and conditions, and also most importantly within what the cardholder might reasonably expect, so the very small changes that I mentioned earlier, then SCA is recommended, of course, if the amount differs more than that. But if it doesn't, then we do believe that strong customer authentication may not be required. The third example here is where we establish an agreement for ongoing or future payments. So this would be, for example, a subscription or a no-show in a hotel, for example. And the key here is that it really does depend on the circumstances. So in the case of a subscription, it certainly would be recommended to initiate that first transaction with Strong Customer Authentication. There may be exemptions that apply for sure for that initial transaction, but it may make perfect sense at the same time. If there's going to be a long ongoing series of transactions, it may make perfect sense to actually perform Strong Customer Authentication when that initial mandate is set up, especially if there is a risk of fraud. In the case of a hotel no-show, it also makes sense that when that initial booking is made, that Strong Customer Authentication should ideally be performed. That will then enable that final transaction, if it's needed, to take place without any dispute as to the status of that transaction. So the next examples we're going to talk about here for remote electronic financial transactions are around the whole subject of merchant-initiated transactions. So the merchant-initiated transactions, I think it's important to make the point here that in the case of subscriptions or regular payments or payments that have been agreed to by the cardholder that form the beginning of a series, there's a recurring payments exemption that caters for those, which enables those transactions to proceed under one of the PSD2 exemptions, which, provided they are always of the same amount, are covered by that particular exemption. So this is a little bit different. This is what we're talking about here, are merchant-initiated transactions, transactions which are completely 100% initiated by the merchant themselves, and the amount may therefore differ. It doesn't necessarily have to be the same as the initial payment, and importantly, these payments must be governed by an agreement between the merchant and the cardholder. This means that there must be some form of terms and conditions which cover under what circumstances those payments may be taken. Merchant-initiated transactions are often associated with direct debits, but we want to make it clear that in many cases card payments fall under this exact same description, and these card payments in these circumstances behave in exactly the same way. So what I want to do is just take you through a few examples of these and how they might work. You'll certainly recognise within your businesses many different use cases which fall under these headings. There will be a lot more detail coming out on merchant-initiated transactions, because clearly behind the scenes it's very important that these transactions are flagged correctly. So these will be publishing some more detailed guidance regarding how you flag these transactions and describing particular use cases. But for the purposes of this particular conversation, I'm really just going to talk about the high-level principles behind it. So the first use case is about how you execute payment. So for a subscription or a no-show. So as we've discussed previously on the previous slide, the initial payment or the initial authentication is most likely done with 3D Secure, with some form of Strong Customer Authentication. The subsequent payments, however, are out of scope of the regulation. So while Strong Customer Authentication is certainly recommended on the setup of an ongoing service, subsequent payments are out of scope, and therefore Strong Customer Authentication is not needed. The second use case is around the merchant updates of payment terms. So for example, you may have, for example, a movie or a TV subscription, and at the end of the 12-month subscription period, the price might go up. This is an ongoing, provided this is covered in your terms and conditions, then this is an ongoing relationship that you have with the merchant, and you don't expect to have to keep going in and resubmitting your authentication or reconfirming with the merchant that you would like to continue for a further 12 months. So provided that's covered by the initial subscription that you signed up to right at the beginning, then again Strong Customer Authentication is not required for that particular scenario. The third example here is where the original purchase might be delayed or split into subsequent events. So something like a VAT, a tax increase, for example, or transactions which are split into several different shipments. So again, provided the original event, the original authentication was done, if it was indeed required, then subsequent payments don't need strong customer authentication, provided they can be linked back to that initial authenticated transaction. And that's why it's very, very important that you acquaint yourself with Visa's MIT framework, and we'll be sending out more details on how you do that later on. So I think it's important also to understand that sometimes some use cases involve non-financial transactions. So this means transactions where an actual payment is not necessarily made at the point of authentication. So I'm just going to describe a few of those use cases as well. So the first one is around loading of credentials. So this is where a card is added on file or provisioning of a token. Now here, strong customer authentication could be required, and it really depends on the situation. And as an issuer, an acquirer, as a merchant, I think you need to look at this very carefully and make sure that you're complying with the best practice that you can when a cardholder is adding or provision a card, to make sure that security and fraud is kept to the minimum. The second use case is where a merchant has received updated payment credentials from the issuer, so for example via the Visa account updater or the Visa token service. So nothing there is changing, it's simply just an update, for example an expired card or something like that. So in this case we would not expect strong customer authentication to be required. However, under the Visa rules, this must be addressed through terms and conditions and other cardholder communications, so that's something definitely worth paying attention to. The third example is where the cardholder provides a new expiry date with no changes to the card number. So you have the same agreement, you have the same everything, the same card, and it's simply just a change in expiry date. Again, similarly to the previous example, it shouldn't be necessary to perform strong customer authentication for those situations. However, the next use case is where a cardholder has a payment agreement with a merchant and adds a new card number to the payment instructions. So you may have an ongoing relationship. For example, it could be a subscription service, it could be a card held on file with a merchant. Now, if a new card is added to that service, then clearly it is a new agreement with that particular issuer, and in those cases we would fully expect strong customer authentication to happen at that point. The next example here is a card validity check. So this is where you want to check the validity of the PAN and of the expiry date. So that might be, for example, a zero value authorization. So in this case, if that is all you're doing and you're simply just checking the validity of the card itself, then you shouldn't need strong customer authentication to do that. If you have security reasons to do so, and you wish to do an authentication, a zero value 3D secure authentication, for example, then absolutely you can do so, but it's not absolutely required. And then the last example here for non-financial transactions is around trusted beneficiaries. So this is where a merchant wants to enroll a cardholder with the issuer onto their cardholder's trusted beneficiary list. Now clearly that trusted beneficiary list is held and owned by the issuer, but merchants, as we will describe later on, in many cases have a role to play in enabling and facilitating the cardholder to place them on that list. Now if that is the case, then SCA should be required on that initial enrolment to make sure from the issuer's point of view and from the cardholder's point of view that that is done in the most secure way and is not open to any form of abuse. So SCA is required on that initial enrolment. So what I would like to cover now is a little bit of information on SCA for face-to-face transactions. Now, I think it's important to know here that from a face-to-face environment situation, then of course there's still the need to perform strong customer authentication in exactly the same way as remote payments. It's just the way in which that this is done changes a little bit. So if you're using a device, then those factors of strong customer authentication would be delivered through possession, for example through the token or the cryptogram, inherence, which could be through a biometric on a phone, for example, or it could be knowledge using a passcode or an online PIN if that particular device does not have access to biometrics. On the card, we're talking about possession taking the form of the card itself, proven by the validity of the cryptogram in the case of a chip card. Secondly, inherence. Now, that could be achieved through behavioural biometrics, and we believed where issuers do have access to Visa's real-time predictive analytics models such as Visa Advanced Authorization, that could qualify as a behavioural biometric because it is clearly able to identify that cardholder through their previous behavioural history. It also looks at their geographic and transactional behaviour to make sure that it genuinely is them. So that should definitely qualify as inherence. And then lastly, the usual example we would give would be around typically a PIN, an online PIN, which can be punched into the actual terminal itself. Now, a quick word on host accumulators and card-based accumulators. So for issuers who have zero forward limits for contactless or contactless markets, where a cumulative limit is reached, they may return a response code indicating SCA is required, which will trigger capture of SCA on terminals which are compliant with the TIG version 1.4. For card-based accumulators, issuers may utilise the new SCA functionalities introduced in the new Visa Contactless Payment Specification version 2.2.1 or higher, which are published in April 2018, to help manage compliance at the card level. So it's really worth, as an issuer, looking into that a little bit more and understanding exactly how you're planning to operate under the requirements of PSD2, because within the contactless scenario, clearly you have an opportunity to exempt transactions up to €50 or an aggregated amount of €150 up to a maximum of 5 transactions. So I would encourage you all to look into that and decide how you're going to make that work for your particular market and for your particular organisation. So in terms of how Visa is planning to help everybody move forward, we have certain foundational products and programs which will be absolutely vital for everybody to make sure that they have available to really take full use of all the new functionality and new technology to be compliant and optimise the SCA requirements under PSD2. So this means predictive analytics, Visa's VAA service, for example, dynamic modelling based on current fraud trends and geographies, and we have many different services available for that, and I would absolutely encourage you to talk to your Visa account executives to find more about what is available, because all of this is really going to help you to take friction out of the system, but not only that, to make sure both on the merchant and on the issuer side that fraud is kept to the absolute minimum. 3D Secure, which, as I've said before, has been around for many, many years. Version 1 we have available today. Version 2 is now available. It's an industry standard for authentication, available across the entire payments industry. And 3D Secure version 2 brings some significant benefits over the existing version. It enables you to have greater access to data, which means that risk decisions can be more accurate. It enables greater utility over different devices, and also underpins a lot of Visa's new services here. So in other words, trusted listing, transaction advisor, biometrics, and delegated authority, all of which I'm going to talk about a little bit later on. And the other foundational program that you absolutely really must take notice of now, which is going to be vital with all of these new services, is tokenization. So tokenization performs a variety of different functions clearly, and is useful across a variety of different payment use cases, but certainly for compliance with PSD2, not only does it enable reduction in fraud by enabling a kind of really limiting the amount of situations where fraud could potentially take place, but it also is foundational to some of the new services that we will be introducing. Now, the first of those services is Visa Trusted Listing. We talked about the exemption for trusted beneficiaries earlier on, and this is a very interesting exemption. But what it means to consumers is that consumers can designate their trusted digital merchants and therefore skip additional authentication during subsequent visits to that merchant. Now, all of us shop regularly at a relatively small number of merchants, and typically these tend to be very well managed merchants that on the whole have very low fraud rates and generally are already using lots of good technology to assess and manage the risk of every single one of their transactions. So we want to make sure that for those transactions that our consumers shop at regularly, that they are not having to experience undue friction in those situations. Now, this is good for issuers because it means that for your best customers, you're able to ensure that they have a frictionless purchase experience, but it's also good for your consumers and good for merchants as well. So how will this work? First of all, I think it's important to say that Visa's Trusted Listing Service will only be available to low-risk merchants. So we will need to be absolutely certain that merchants using this service are doing a really good job of managing their fraud. And the regulation clearly caters for that. There are many fraud reporting guidelines that all issuers and acquirers will have to abide by, and everybody is going to be very mindful now of making sure that their fraud levels are maintained within certain key ratios. So how does this work? First of all, a cardholder will check out on a merchant site as they would normally do, and they will get the opportunity to be asked a question whether they would like that particular merchant to be added to their trusted list. They can choose, they can say yes or no, and in most cases, of course, we would expect that they would say yes. And there will be a little bit of information there to explain to them what that means and what the benefits are. Secondly, if 3D Secure is required, and certainly when enrolling to Visa's Trusted Listing Service, it will be required for that very first enrolment, then they will go through the standard 3D Secure process, and we would hope that to be as frictionless as possible, perhaps using biometric on a smartphone. And at that point, they are authenticated to make sure it is absolutely them. And that store will then be added to the issuer, to the whitelist, to the trusted beneficiary list held by the issuer. Very quickly after that, the cardholder will receive an order confirmation. What this means to the cardholder then and to the merchant and to the issuer, that there are a lot of benefits with this. First of all, it's a seamless checkout, so consumers are not wondering why they're having to be stepped up every time they visit merchants where they check out all the time. In these situations where cardholders are regular shoppers with the merchants know a lot about their cardholders. They know whether they've logged into their site, they know generally whether they're using the same device. So merchants are in a very good position to assess the risk of their transaction and would not knowingly send on a transaction if there was anything suspicious about it at all. So from a merchant perspective, it puts them in a lot more control of that transaction. Secondly, that transaction would then be passwordless. There's no need for passwords, SMS codes, or any other friction that would involve slowing down that purchase or even risking abandonment of that purchase at all. It means that in essence, that should translate then through to higher authorization rates. So from a merchant perspective, it means that completing that sale is much more likely, and we optimize their purchase experience through the checkout absolutely with trusted listing. It also means that those payments are much more secure, because no payment with trusted listing would be sent through if the merchant had information that meant that particular transaction was not secure. And of course, it reduces operating costs for everybody across the ecosystem, meaning that SCA does not have to be performed every single time. The next service I want to talk to you about is Visa Transaction Advisor. Now, many of you will know that within the regulation there are exemptions for low-risk transactions, provided that they fall within certain qualifying criteria. So for a low-risk transaction to qualify, both merchants, either merchants or issuers, and both of them have an independent right to this particular exemption, it's worth saying. The actual reference fraud rate, which is calculated by a function of fraud to sales, must be below 13 basis points if a issuer or acquirer would like to take advantage of this exemption, if the transaction is under €100. They could take advantage of this exemption up to €250 if the transaction, if the reference fraud rate is below 6 basis points. And lastly, if the reference fraud rate is below 1 basis point, they could potentially take advantage of this exemption up to €500. Anything above €500, strong customer authentication will be required, unless of course it falls under any of the other exemptions or it's out of scope. So what we're doing with Visa Transaction Advisor is making sure that merchants, gateways and acquirers have full opportunity to take advantage of this particular exemption by using Transaction Advisor to identify low-risk transactions. Clearly, under 3D Secure, within Visa's new set of rules, all issuers will need to have access to risk-based authentication. So on the issuer side, we have a lot of new solutions which can help them comply with that requirement if they need help from us. So please do talk to us about that. But this particular service is really designed for merchants, gateways and acquirers. So what are the projected benefits of Visa Transaction Advisor? First of all, clearly designed to reduce fraud, reduce shopping cart abandonment and streamline the entire payment experience. So having done some research into this, we believe that fraud reduces by as much as 20% when advanced predictive analytics are used. And with Visa Service, we're evaluating over 500 unique risk attributes for millions of transactions every minute of every day. And this is unparalleled in terms of the amount of data that Visa has access to really make sure that the entire data available to us within that transaction is used to underpin that particular risk score. That means better fraud detection rates with more data elements also included and added into that from 3D Secure version 2. The net result of that should mean a reduced shopping cart abandonment, because merchants should be able to apply that SCA exemption more regularly, with the goal being, of course, higher approval rates, and meaning reduced latency due to fewer request messages going the whole route through 3D Secure. And of course, this entire Visa Transaction Advisor can be customized for clients and according to particular merchant categories as well. What Visa Transaction Advisor does is to actually provide qualifying criteria for the SCA exemption analysis. So it will actually return a risk score in the first instance. That risk score will be sent back to the merchant, to the gateway or to the acquirer, which, using all of that Visa data and predictive analytics, assesses the actual risk of that particular transaction. It will then also return a recommendation based on the calculated TRA reference fraud rate of that particular PSP, will return a recommendation based upon whether the merchant, acquirer or gateway should have access to the TRA exemption. And it will also, if that is not the case, if there is any recommendation against that, will supply reason codes. That gives you a little bit more granularity. If there is a decline or a recommendation not to go forward with the TRA exemption, it will clearly describe exactly why that is. So you can see this is a very, very useful piece of technology for acquirers and merchants and gateways to really make use of this particular exemption. The next piece of technology we have available to issuers in this case is around biometrics. Now we know there's a very, very fast movement towards biometrics across all categories of payments, in fact all streams of life, to be honest. Everybody is moving in the direction of biometrics, but that does take time. We absolutely recognise that not all consumers have access to biometric devices, but where they do, we have some really great biometric technology which we can deliver to issuers to help them to really accelerate this move towards biometrics. And the great thing about biometrics is that they provide a much more seamless experience for the cardholder at the checkout. So it means no remembering passwords, no having to type in SMS OTP. It's a very, very quick, easy and seamless way for issuers to help their cardholders authenticate themselves within the 3D Secure framework. Now we have SDKs and APIs available that can provide push notifications, all available to issuers. So this service will be available mid-2019, and I would absolutely encourage all of you to get in touch with your account executive to find out a little bit more about what Visa is doing in biometrics. Lastly, I wanted to introduce a new concept which we're working on now called Visa's Delegated Authority Programme. Now, a lot of merchants and issuers as well, actually, and acquirers have been coming to us and asking us to look into this in a little bit more depth. So strong customer authentication is often thought of as being done purely by the issuer. Now, actually, in many cases, the issuer is able to delegate that responsibility to a third party. So that happens today in the case of the pays, for example. And what we want to do is to try and provide this same ability, to outsource that requirement beyond simply the pays and into the wider merchant network. So this is where we're looking into the opportunity where issuers may allow a merchant, for example, or a wallet provider to actually conduct strong customer authentication on their behalf. And what Visa are developing is a program where we can manage this delegation process for the ecosystem in a secure way so that we are able to make sure that anybody that wants to enter into this program has to pass through very, very strict entry criteria, so we can make sure that the security and integrity of the ecosystem is absolutely managed very, very carefully. So there'll be more information coming out on this soon, but I think for merchants amongst you, this is a very, very interesting opportunity where you wish to look into this, and certainly for the issuers, it's going to be a much easier way to conduct strong customer authentication in some certain use cases. So look out for more on this because there's more coming very soon. So in terms of how we are delivering our SCA compliance and the approaches and tools that we're offering, first of all, the MIT framework. This is a vital piece of technology that everybody needs to have in place. We have had the MIT framework in place for many, many years, and what I would encourage you to do, if you have not adopted it already, please take a look at this. Make sure that you introduce any new technology changes you need to do to make this available, whether you're an acquirer or a merchant or an issuer, because being able to identify and flag MITs correctly will be absolutely vital, and issuers will need to be able to see those transactions correctly flagged, or may not be able to identify them and then might need strong customer authentication to be deployed. So please do look at that very carefully, and it's available today. The second piece of technology that is absolutely vital that you have available is Visa's new SCA response code. So this is for situations where an issuer might have received a transaction that is either wrongly flagged or does not appear to have any exemption criteria attached to it. And in those situations where the issuer really does require strong customer authentication to be performed, and it has not been done, they have the opportunity to send back a new SCA response code, which is effectively a response to the acquirer telling them that they cannot approve this particular transaction unless SCA is required. And that means that acquirers can pass that on to the merchant, and the merchant, while the cardholder is still in session, can initiate a 3DS call and make sure that Strong Customer Authentication is done, and send that back again to authorization with a cryptogram. This new response code will be available for testing from January and will be mandatory in Europe from October. So I would encourage you all to make sure you have that on your technology roadmap, because this is going to be vital. Thirdly, in terms of exemption requests, there are going to be two ways for merchants, or acquirers actually, but merchants on their behalf, to indicate to an issuer that they have the right to an exemption. And this will be communicated in two ways. Either through 3D Secure, where we have flags available within the 3D Secure system for trusted listing and for trusted beneficiaries, and also for low risk transactions. And we also will have flags in the authorization message for trusted beneficiaries, for low risk transactions, for corporate cards, for low value transactions, and are also developing new technology to ensure that one leg out Moto and merchant initiated transactions can also be flagged very easily for the issuer to identify. And it's going to be really vital that all of you make sure that you have these in your technology roadmap and are able to deploy them by September. If you don't, as I said before, issuers may not recognise exemptions and transactions may need to be declined. It's really important you have those done in time. So that really does conclude the conversation today. It's a very high level discussion around Visa's view and our interpretation of the regulation. And what I think it would be really good now is to make sure that all of you are aware of our new SCA client paper that's now available. So please do take a look at that. If you would like more information, please in the first instance reach out to your Visa account executive. But in the absence of that, we have a mailbox, psd2questions@visa.com. And please do reach out to us for more information on any of the subjects that we've talked about today. In terms of takeaways, though, I really want to stress that it's really important to plan and prioritise the implementation of 3DS version 2, to implement your new authorization message enhancement, tokenization and biometrics, all of which are going to be vital for PSD2. It's really important to understand and determine which transactions are in or out of scope of SCA. So I'd encourage you to look back at some of the guiding principles behind particularly the MIT framework and where that will come into play. And also work with your service providers, your vendors, to make sure in terms of timing that they are ready and that you yourself know how you're planning to address a lot of these exemptions. As I say, this is a fairly high level description of all of the new technology and Visa's understanding and interpretation of the regulation. So please do stay tuned for future webinars and materials. There's a lot more information that you'll be seeing in the coming months, and please do just stay tuned for all of those things. So thank you very much for listening to all of this, and I hope this has been useful to you. Thank you.